Good afternoon, ladies and gentlemen. My name is Michalis and I'm one of the market analysts here at HF Markets. I'd like to welcome everybody to the first webinar of this week. Today, we're looking at a topic that we haven't looked at in quite a long time. We're looking at, yes, options that you have when you're trading alone, but we're also going to be looking in a lot of detail into copy trading. Now, it's not necessarily a webinar where it's just about copy trading, telling you that copy trading is the best thing in the world. No, we're going to look at copy trading, its benefits, its weaknesses, certain loopholes that you need to be cautious about, and how you can use it in an amazing way as well. And something else that you also need to take into consideration is it's not an investment for, say, where you just copy somebody, you put some money in, and then you forget about it. It's not that type of investment. So even though you're a follower, so you're using copy trading, it doesn't necessarily mean that you are doing so without any thought in any way, shape, or form. We are, of course, still need to do some sort of analysis. So as part of today's webinar, we're going to be analyzing both copy trading and options when you're trading on your own. And in regards to copy trading, we're really going to be looking at a lot of details in regards to how can you pick the right copy trader, because it doesn't mean that just because they're a strategy provider that they are a successful trader. It doesn't mean that. Some people, and I'll show you exactly how you can look at this, some people that are offering their services as strategy providers have been trading for 6 months. Some people have been trading for 6 years. Some people have been trading for 26 years. So a lot of people, a lot of the time, they make decisions based on nothing other than profit, whereas really, if you want the best possible outcome, and I always say to people, some people like surprises. In the financial trading markets, because I'm a financial advisor by trade, I've been a trader for 10 years now. In the financial trading market, surprises aren't good. So what we want to see is what we are looking for to actually achieve it, okay? This is what we're going to be looking at as part of today's webinar. Now, we're going to start off today's webinar with a poll. A lot of people that have watched previous webinars before, everybody knows me well. We're not just very simply going to look at a presentation that everybody writes some notes. I want this to be fun. I want people to be part of today's presentation. We're going to do polls. Certain people are going to be speaking. Of course, I'm going to be speaking. If people have questions, they're more than welcome to ask. If people want to share something, their personal experience, and for us to talk about it, again, I'm more than willing to do that, ladies and gentlemen. So this is what we're going to be, talking about as part of today's webinar, but there's going to be a lot of different aspects involved. So I'm only going to leave the poll open for another 10 more seconds, ladies and gentlemen. I can see most people have answered the poll already. So which category do you fall under? Are you using copy trading? Are you copy trading and opening your own trades? Are you only opening your own trades, or are you not trading yet? Okay, let's end that poll and I'll confirm the results. 19% said they're using copy trading alone. 37% said they're using copy trading and opening their own trades. 26% said they're opening their own trades, and 19% said they're not yet trading. So for all these individuals, no matter what category you're falling under, today's webinar is going to be a really important topic for you. So I've got some people leaving some comments. We've got some people from Namibia, another person from Namibia, somebody else is saying hello from South Africa. We've got also somebody here saying hello from Latin America. So what part of Latin America are you from? But hello to Latin America anyway. Hello to everybody from Asia and Africa and the Middle East as well. Let's get started though, ladies and gentlemen, because we've done a very quick introduction. I really want to get started looking at aspects of copy trading, how to choose strategy providers, things you need to be cautious of, things you definitely need to look at, and how to look at them to ensure you are choosing the right copy trader, strategy provider, as we call them on our platform. So before we look at that, very quickly, I want everybody to be aware that, of course, when we're looking at investing, it's an investment. It's not savings account. It's not a bank account. It's an investment. So you need to be cautious about that. You need to be aware of that, and also you need to definitely be aware that as part of this webinar, we are here for educational purposes. We're not here to give you direct investment advice. Now, I want to get through this slide very quickly as well, because it's not necessarily important to today's topic. A bit about my background, because some people may not know me. 19% said they've never traded before, so maybe they've never watched a webinar before as well. So my name is Michalis. I'm originally was a London-based financial advisor. I was that for 4 years. That's going back 7 years ago. I've been a market analyst for 6 years as well. I've been trading and investing for 10 years overall, ladies and gentlemen. So that's just a bit about my background. Now, somebody says here, I'm a new trader and I need guidance and good strategy. Today's webinar isn't about strategies. So we're not going to look at a strategy about how to enter and exit the market. For example, tomorrow's webinar is 100% 45-minute webinar, which is based on trend-based strategies. Today, what are we looking at? We're looking at, well, in a sense, there's a strategy as well. Strategies in terms of copy trading, how to pick a copy trader, and also strategies about how to take your first steps in the financial trading markets as well. So in that sense, we are covering what you're looking for as part of today's webinar. It's a great webinar for beginner traders. But if you want something which is just purely looking at a strategy and looking at nothing else, then of course tomorrow's webinar is going to be the best one for you, I believe. So copy trading. What is copy trading? Copy trading, ladies and gentlemen, is basically when we allow you to copy other traders. So a lot of people, they say to me in the past, before we even offered this, before it was even around, a lot of people used to say to me, I wish I could see what other traders were trading. I wish I could see a successful trader and see how he is trading so I can do the exact same. Because large institutions do this as well. It's very well known within the financial trading markets that large institutions like Goldman Sachs, like JP Morgan, like Jefferies, Wells Fargo, and so on and so forth. Everybody knows that these individuals, they look at the market, they see who's profiting, and if they see people profiting, whatever they do, they go and copy it. So it's very well known within the market, but it's never been around for actual day-to-day traders. Of course, traders like yourself, other people watching today's webinars, and also once upon a time, I was a beginner trader as well. So what is copy trading? It is a service on our platform which allows you to copy other traders. So it allows you to copy strategy providers. That doesn't mean you can copy any trader. Doesn't mean somebody's going to be copying your trades. You may not want people to copy your trades. That's absolutely fine. It has to be somebody who is willing to be a strategy provider, so that they come up and sign up and they say, I'm a strategy provider, I'm a fund manager, I'm a financial advisor, whatever it may be, and I want to open trades and allow people to copy those trades. So this is copy trading. It's when you make an investment and you follow a strategy provider of your choice. This is something very important. It is of your choice. Now, this is where the difficulty comes. It's not difficult to follow somebody. Anybody can follow a trader. The difficulty is how to follow the trader responsibly, how to do so in order to potentially maximize the profits and minimize the risks involved as well. And in addition to this, how do we pick a strategy provider? Because you may go on our platform and say, oh my God, there's 500 strategy providers. How on earth am I going to know which one should I be following? So I'm going to show you very clearly and easily, step by step, how you can look at this. So when there's copy trading, there's always two sides, okay? You have the follower. The follower, ladies and gentlemen, is the trader who is requesting to copy another trader. So the follower is the individual that's following the strategy provider. The other side is a strategy provider, which is the individual doing the trading, and everybody else is copying him. And the third party, ladies and gentlemen, is of course HF Markets, HFM. HFM, ladies and gentlemen, is a third party, but we solely are connecting you. We provide the platform, we provide the service, but we don't get involved in any other way, shape, or form. We're just connecting traders from around the world. So we're not going to be opening the trades. We're not going to be having any influence over how much you're going to invest, how to invest, how they're going to trade, and so on and so forth. And our system is so advanced that everything is there for you. There's nothing there hidden. You can see his trading history, you can see his open trades, you can see his latest trades, you can see his success rate, his reward to risk ratio, and so on and so forth. So that's point number 2. Copy trading allows inexperienced traders to copy other trades. So of course, if we've got very experienced traders, most likely they're not going to be using copy trading. Why? Because they're experienced, they probably have a high success rate, they probably have a positive reward to risk ratio in comparison to their SS. What they use, which is similar, is something known as order flow, which basically shows them how everybody in the market is trading, but not necessarily using copy trading. But it can be a great tool if used appropriately and in the right way for inexperienced traders or for individuals, so somebody that's not even a trader yet. Point number 4, HFM allows you to copy all strategy providers regardless of their account size. So HFM, ladies and gentlemen, you can be an individual who's making a small deposit. Let's say, for example, you're investing only 50 US dollars, should we say. You may be with an account with 50 US dollars, be following somebody that has an account of 50,000 US dollars. So experienced, should we say, an inexperienced trader with a relatively low account can be copying somebody which has a lot of experience, maybe 10 years experience, and has a massive account. So that's a very big benefit as well. It's not that you've got 50 US dollars in your account. You can only copy people that also have 50 US dollars in your account. Now, some people may say, well, there's a risk to that for me because somebody with 50,000 is going to be trading a lot more than I am able to copy because I only have an account of 50 US dollars, not 50,000 US dollars. And our system is so advanced that that won't be an issue, and I'll explain exactly why that's not an issue and how advanced the system is to ensure that it's not overexposing you based on their account size. So one of the reasons why it's not an issue is HFM allows you to choose the trade size. So even if you're copying somebody that has, for example, 50,000 US dollars in his account, and every trade he's opening, let's say it's a massive trade, is one lot. Every single trade he's opening 50 trades a day. Of course, you can't follow that. We allow you to choose the trade size. So for example, if he's opening one lot, you don't have to open one lot. You can open 0.01 lots, for example. So you're looking at very little volatility compared to the larger trade, very little capital requirements, again, compared to the other trade. So that's also another option for you. Our platform will allow you to maintain control over your account. This is something very important. Not every platform has this option. Some people say, you know, you're either going to copy me or you're not going to copy me. We don't have that should we say motto. We don't have that rule. You can copy somebody, but if you don't agree with some of his trades, you can alter them, you can close them, so you have still full control over your investment, even though you are copying another trader. Copy trading can be used as an investment, but also as a method of education. This is something extremely important. This is also extremely important for those individuals that are following copy trading, but also want to start trading by themselves. We've got a lot of very helpful educational tools. We have webinars, we have live analysis sessions, we have one-on-one sessions, we have everyday daily market analysis. We have copy trading. There's a lot of educational material and services. Something which is a great service is copy trading. People think copy trading is there as a service, either to invest, to make money, to trade for them. It's also an educational product because you can see how experienced traders are trading, how they're trading, the directions they're trading, their reward to risk ratio, what they're trading, when they are trading it, how long they're keeping their trades open, and so on and so forth. That continues. Again, we'll look at that though in more detail. Is copy trading free? This is something that a lot of people ask. It depends on which way you look at it. From our side, we do not charge you for copy trading. There's no additional charges in any way, shape, or form. We don't charge you commission. We don't increase the spread. We don't increase the swap fee. We don't add a withdrawal fee or deposit fee. There's no copy trading fee. There is zero fees whatsoever. The only difference is the copy trader will have a fee. This is known as a performance fee. Now, some people may say I don't like that. I'm investing only $50 US. If you're going to start charging me, then of course it's not me worth doing this. The performance fee is a benefit for you. Why is it a benefit for you? Because you are only charged if you are profitable. This is a massive benefit, ladies and gentlemen. If you're being charged regardless of whether you're profitable or not, then how can you trust the individual you are copying? He is only going to be paid by you if he earns you a profit, and it's a performance fee. So for example, ladies and gentlemen, if you earn $50 US, he may charge you a 10% performance fee. So he earns you $50 US, and you will pay him $10 US. His performance fee could be 10%, could be 25%, could be 30%, could be 5%, could be 95%. To be honest, I haven't seen a performance fee that's ever that high. But of course, this is something we need to be cautious about. To be honest, I've never seen a performance fee very high before, because of course people would rather have a lot of people following them, all of them making profits, and then charge them a smaller fee, rather than of course only having 2-3 people following them, or 50 people only following them and charging a massive fee. Doesn't make much sense for them. It's better for them to have more people following. I've got another question. I'll quickly answer this question. Some people said if you can demonstrate on a demo account how copy trading works. I've taken some screenshots. Please bear with me on a couple of slides. We'll look at the screenshots from the actual platform. I think that will help you massively because it's screenshots from my demo account. So opening your own trade. There's 2 routes, traditional routes. You can go down the route of copy trading. You can go down the route of opening your own trade. There's actually a 3rd route that not a lot of people know about. So opening your own trades. Traders analyze the market. They need to determine a loan and determine how they're going to speculate the market. Decision making will either be based on their analysis, somebody else's analysis, or signals. Either way though, it's your decision. So even if you're following a signal provider or looking at some of the indications we have on our website, or you're following analysis or market analysis that we provide every single day, the decision is 100% with you. So you're opening your own trades. Now, as a beginner, because we've got a lot of beginners here, as a beginner, I've got some more questions. I'll answer those in a moment. I'm not ignoring them. It's just I want to go through things step by step. So I'll complete this page and then we'll answer those questions. So a lot of it, because today I don't want to focus on strategies. Yesterday we had live analysis. We looked at a lot of trades. Everything hit their take profit, by the way, ladies and gentlemen, which is great news. Last week we looked at strategies. Today I didn't want to look at strategies. We're also going to look at strategies tomorrow. But what I wanted to do is just put 6 very simple things down. 6 factors that a beginner trader can take into consideration in order to put him on a good path. So yes, we need strategies. Yes, we need a trading plan. Yes, we need a risk management plan, and so on and so forth. We've got so many webinars which are based on those. If you go to YouTube, you can see a million webinars which are based on those. But very quickly, 6 things that will massively help you. So as a beginner, first things first, trade one asset, okay? Trade one asset. Ideally, trade the cheapest asset as well. There's an overnight fee on a lot of accounts. You, of course, can trade with the account that has no overnight fee, so a swap-free trading account. Of course, that's definitely better. But if you're not, for whatever reason, of course, trade the cheapest asset. The other thing, trade one asset. What's the easiest way that I can put this for you? Do you go to university and study 5 degrees? No, you don't. If you look at Bloomberg and you look at all these people which are speaking for Jefferies, from Goldman Sachs, from JP Morgan, from BlackRock, and so on and so forth, all these large companies, you'll never see somebody, market analyst of the whole market. It's always strategists for the Euro USD, strategist for technology sector, strategist or market analyst for currencies. So they focus on one thing, and then they are experienced, educated, licensed market analysts, financial advisors, economists. You're not. You're a beginner at the moment. Yes, in 10 years' time, you will be where they are, but you're a beginner. So why make your life difficult? There's a million assets that you can trade, but trade one, because your expertise and your knowledge and your confidence in 6 months' time of only trading one asset will be so much more vast and better than if every single day you are trading a different asset, or you're trading different assets at the same time. When you trade one asset, it's so much more easier. Why not make your life so much more easier? I saw a pop-up of a question. It's a quick question. What's the cheapest asset? The cheapest asset, ladies and gentlemen, is very simple. It's the Euro USD. That is the cheapest asset. There's no ifs, there's no buts. That's the cheapest asset. So point number 2, always have clear exits for both profits and loss. So before you even enter the market, if you're thinking to yourself, I've got an indication here, the market's moving up, I think it's going to continue moving up. Before you even enter the trade, you should say to yourself, before I enter it, this is where I'm going to exit, and this is if it moves in my favor, and this is where I'm going to exit if it moves against me. So even before I enter the trade, so for example, let's say the market does something like this, and I'm thinking of entering here. Before I even enter, I know that this is where I'm going to exit if it turns into a profit, and that this is $50 US, and this is where I'm going to exit if it moves against me, and that's $30 US. So that makes sense. So I know I'm trying to earn 50, and the worst case scenario, I'm going to lose $30 US. Does that make sense? Does that fall into my risk appetite category? That's responsible trading. So always, even if you're not putting a stop loss and take profit, always know your exits before you even trade both for profit and for losses. Have a positive triple R. So people know it as a triple R in the financial trading market. People also know, you may hear it on Bloomberg, they say it's very important to be looking at your R's. It basically stands for reward to risk ratio. How much are you looking to earn compared to how much you're risking per trade? So for example, if my take profit's at $9 and my stop loss is $5, then that's almost a 2-to-1 reward to risk ratio. If I'm looking to earn $50 US and I'm risking $10 US, that's a 5-to-1 reward to risk ratio. So what's a positive reward to risk ratio? A positive reward to risk ratio is when you're trying to earn more than what you're looking to risk. Okay. Also, if that's the scenario, if you've got a positive reward to risk ratio, you should never have a trade which, a lot of people say to me, I opened the bad trade and it wiped out the profit which I had from 5 different trades. That would never happen. If you've got a positive reward to risk ratio, that never happens. People that have one trade wipe out the profit from 5 trades or 10 trades, whatever it may be, it means you have a negative reward to risk ratio. So don't make that mistake. So be very strict on that. Don't keep trades open over the weekend. Weekend risk is a big factor. We saw it last weekend. We saw it the weekend before that as well. So keep that in mind. Number 2, don't be in a rush to become a millionaire. Don't be in a rush to earn a lot of profit or passive income. I'll tell you straight away. I'll tell you, if you're a beginner and you're investing, you've invested $100 and you just want to make a lot of money very quick, I want to quadruple the money every single week, I guarantee you now you'll lose. Okay, you will not earn a profit, you will lose a percentage of your money, whatever it may be, and you'll be very unhappy. So don't make that mistake. I'm sitting here telling you it. It's a fact. You can go on Google, you can type the question in, and they'll tell you the exact same thing. If you're investing and you're in a very short period of time trying to become a millionaire, you're going to be a very unhappy trader. So open the minimum trade size. Open the minimum trade size. The main thing that you want to be looking at is that your success rate is increasing. Your foundations are increasing. Your understanding of the market is increasing. Your R's are improving. So for example, let's say you're starting as a beginner trader, your success rate is probably going to be low. It's probably going to be like something like 40%, for example. Your reward to risk ratio probably will be negative. You're probably risking $10, well, it's $16, $16 to earn $5 US. A lot of beginner traders do that. It's not the best thing. Instead of saying to yourself, oh, I want to become a millionaire, say to yourself, you know what, this week, I want this success rate to become 50%. And I want my reward to risk ratio to become hand in hand. So 10 over 10, to earn 10 and risk 10. This is something which is more responsible. Trade the cheapest asset, of course, we've already mentioned this. So which is better, copy trading or making your own decisions? To be honest, use both. Do both. People are going to say to me, please help me. How do I pick a strategy provider? We're going to look at that in a moment. But use both, ladies and gentlemen, because there is, even if you're copy trading, trade alongside him. Now, what does that mean? Does that mean opening your own trades? Yes, you can do that as well. But as he's opening his trades, manage them. They're your trades. You're just copying his trades, but those trades are on your account. Manage those trades. If you think the market's going to move against you, close them. Guarantee that profit. So he's opening those trades. It's up 5%. News is about to be released. You think the market's going to move in the opposite direction? Close it. Don't wait for him to close it, because the news is about to be released. Maybe it moves against your trades, and then it hits the stop loss. Why not close it? Why not manage it yourselves? So use a mixture of copy trading and trading, making your own trading decisions. And I don't mean having a copy trading account, not looking at that or giving it any attention, and then trading on your own on another account. As he's opening trades, manage those trades. Because, for example, there was an individual strategy provider who kept buying at a lower price. And if people weren't managing those trades, they would have been very unhappy. Whereas if they're managing it, even though he was making the wrong decisions, and I'll give you this example, even though he was making the wrong decisions, you still could have been profitable, or at least at the break-even worst case scenario. But if you weren't managing it, you would have been a very unhappy trader because he was making the wrong decisions. We're going to look at that in a later slide. Let me quickly answer these questions. How can I know that a trader I'm copying is good to copy? We're going to look at that on this slide. So one moment, this slide's where we're going to look at that. A lot of people are saying, give me an example of the cheapest asset. The cheapest asset is the Euro USD. Amongst indices, because a lot of people want to trade indices, it's the NASDAQ. Amongst currencies, after the Euro USD, it's the pound against the US dollar. Yeah, those are the three most, the three cheapest assets. Again, though, benefits to only trading one. How can I trade without much loss? We're going to look at this now, ladies and gentlemen. And to be honest, it's something that you need to follow all webinars. Follow each and every webinar. You'll understand how to trade while attempting to minimize your loss. How can I predict the news? Guys, today we're looking at copy trading and trading on your own. We're not looking at news trading. It's not part of today's webinar, but we can look at it in a lesser extent. If you're trying to predict the news, you're not going to succeed. You're not psychic, you can't predict the news. What you need to do is be prepared based on whatever is released. So whether the price is going to go up, you need to be prepared. Whether it's going to go down, you need to be prepared. So it's about being prepared for the price movement, not predicting the news. You can't predict the news. Nobody can predict the news. Look at, for example, the Federal Reserve. The Federal Reserve this month didn't cut interest rates when they should have, but they didn't because they didn't expect what happened on Friday and this week so far to happen. But it did happen. Why? Because they can't predict the news, not even the Federal Reserve. So let's continue, ladies and gentlemen. Strategy providers. Thoroughly check the strategy provider statistics. So a couple of things for you to, of course, look at. When you're looking at the strategy providers, of course, keep in mind on our platform, when you click on copy trading and you open your copy trading account, you will see different things. You'll see a list of strategy providers. On the top, though, you also will see the most popular strategy providers of the month, of the past 6 months, of the past year, and so on and so forth. So that can help you filter as well. But how can you choose which strategy provider is responsible, which strategy provider is potentially the best and most suitable for you? So let's start looking at this point by point. So the first thing is the risk score, okay? Now, the risk score, ladies and gentlemen, of course, everybody has different risk appetites. But like I can see here, a lot of people are saying, I don't want to lose money. How can I minimize my loss? I don't want to lose. How can I only lose a certain risk, a certain percentage? People don't want to lose. People are in the low risk category. And that's understandable because they're beginners. That's fine. It's not a bad thing. So why trade somebody with a higher risk score? Don't trade the individuals with a higher risk score. So very simple thing. Only look at the ones with a low risk score. Now, the other thing, ladies and gentlemen, somebody here says he doesn't have any sound. From what I can see, we have sound, so maybe refresh and that will help you. So point number one, risk score. Risk score should be 1, not 2, not 3, not 4, not 5. It should be 1. Now, point number 2, if they're seeing significant gains, like this, for example, and like this, you need to be cautious, okay? Because most people that are seeing significant gains, there's 2 issues a lot of the time. Issue number 1, if you go on their trade history, when you click on them, it will show you this here, ladies and gentlemen. If you look at their trade history, it won't look something like this. It normally will be something like plus 50 gained in 1 month, lost 25 the next month, plus 50, lost 35 the next month, plus 40, lost 150% the next month. It's very unstable. That's risk bells ringing We don't want something like that. That's very dangerous. There's risk there. You need to be cautious of that. So if you're seeing somebody with significant gains, you need to be cautious, because one scenario is that, okay, and you need to check that. Like I said, you can click on them, go here, you can see, for example, this gentleman has only started trading in April 2024. So he doesn't have a track record. But if he does have a track record of 12 months, 24 months, 36 months, and so on and so forth, check, make sure he's seen consistent, consecutive gains. That, okay, is going to make you comfortable. If it's very up and down performance, why would you follow him? Makes no sense. So that's another thing. Point number 2, is he seeing a lot of gains because he's closing all his trades in a profit, but never closes the ones in a loss? And he's just got a bunch of trades, 50 trades, 100 trades, all of them are in minus. So it looks like he's seeing gains, but he's not. And I'll show you how you can avoid that. This is why this webinar is very important as well. So that's another thing you need to be cautious about. The next thing is, surely you'll be more comfortable trading an individual which has consistent gains. So month number 1, plus 5%. Month number 2, plus 5%. Month number 3, plus 4%. The next month, plus 7.5%. That's something more reasonable. That makes sense. That's understandable. Okay, it's something which is positive. It's not, if it looks too good, it is too good. Okay, so that's something for you to keep into consideration. The next thing, ladies and gentlemen, of course, you need to look at is how long has he been trading? How long has he had a track record? So, for example, this gentleman here, it's great to see, 2%, 17%, 13%, 11%, 2%. Okay, that's 2% because this was done yesterday, the webinar. So we're talking about only 5 days of the month. So his gains are quite consistent. So that's something which is, a positive. But he's only been trading since April, okay? So that's something else that you need to look at. Ideally, we want to see somebody with consistent gains, reasonable gains, not stupid gains, because there's something you need to be cautious about there. Otherwise, Goldman Sachs would, of course, come and copy trade him, and they're not. But you also need to see their track record. Ideally, you want to see a track record. Ideally, you want to see a 12-month track record. Doesn't mean if they have a less track record that they're not a good trader. It doesn't mean they've only been trading 5 months. Maybe they were trading elsewhere previously before that. But again, that's something you want to check as well. Something very, very important, max drawdowns. The very max that you want to see is 10%. The very max that you want to see is 10%. What does drawdowns mean? If you go to Google and type in max drawdowns trading meaning, it will give you a lot of information as well. But it's basically saying what was the lowest point of his account. So if he's invested 50,000 US dollars, what was the lowest point? So if you invested 50, 10% is 5,000. So the lowest his account ever got was 45,000. If his track record, and a lot of people like these gentlemen here, which have plus 200%, plus 300%, plus 1,000%, if you check their drawdowns on their account, it's massive. It's like 30%, 40%, 50%. Again, that's risk that you don't want to be involved in. So that's another thing. Number 2, check their withdrawals. If they're seeing withdrawals, that's also a positive thing because it means that they're seeing profit, they're withdrawing it. They're getting performance fees, so they're earning profits from for traders, and then they're withdrawing that, so that's a positive sign. Of course, if they've only got a little track record, maybe they haven't done a withdrawn, but they will at some point. So it's not, if they don't have that, it's an end of story scenario. The other thing, you want to check equity and balance. The equity is more important than the balance. Balance will only look at their closed trade. Equity, we look at both open and closed trades. So what does it mean? If they're saying that I've earned 100% in the past 6 months, their balance, ladies and gentlemen, is 100K, but their equity is 50K. What does that mean? That means he's closing all of his profitable trades and leaving all of the ones which are in a loss open. That will give you a loss. So that's not profit, ladies and gentlemen. So you need to look at balance and equity as well. Ideally, you want to see initial deposit being lower than the equity and balance as well. Of course, if they're withdrawing, you need to take that into consideration as well. Now, what else is extremely important? Extremely important is look at how many open trades they have. Because if they have open trades, look to see if those trades are in a massive minus. Most probably they're not, but you need to check that. Look at this, ladies and gentlemen, profitability, 64%. Ideally, you want it to be 65 and above, okay? Negative trades closed, positive trades closed, okay? This will give you his success rate. We can also see the success rate there, it's 65%. Like I said, the bare minimum is 65%, ideally, okay? You may have a different take on it. It's completely down to you. But of course, the higher, the better. So of course, that's something you need to look at. Number 2, average profit, average loss. This is the reward to risk ratio. So he's on average aiming for $6.70 and risking just under $6 US, okay? This is very important. You want the reward to risk ratio to be positive. This is positive. This is just about positive. Nonetheless, it is positive. So again, that's something for you to take into consideration. Another great thing is you can see he's only trading one asset. He's not stupid. There's a reason why he's only trading one asset. So that's something, these are things for you to do in order for you to see that, okay, yes, this is somebody that I want to be trading. So point number 1, max drawdowns, no more than 10%. This is slightly more than 10%, but that's fine, okay, more or less there. Other thing that we want to see, every single month, is he seeing consecutive gains? Ideally, we want to see that he's seeing consecutive gains. That's something that we want to be seeing, ladies and gentlemen. We also want to be making sure there's no major dips. Here, for example, we can see a major dip. That's a concern, okay? So that's something we also need to be looking at. For example, this is a concern, ladies and gentlemen. I've seen such a big major dip. This isn't a massive concern. That's not a massive concern. So we need to check if there's major dips. Of course, if there's a dip because there's a withdrawal, that's absolutely fine. That's not an issue in any way, shape, or form. We check the balance. We check the equity particularly. We look at his success rate, 65% and above ideally. The number of trades open that closed in a profit, negative. We need to look at that. And his R's, the reward to risk ratio, ladies and gentlemen. Something very, very important. So I've got somebody here who says, what tutorials are great to learn SMC trading strategies from the crash as a beginner intending to build himself? Any recommendations, resources to get on hand? Guys, the best thing I think that you can do is webinars. Point number 1, look up live webinars. Of course, looking at live webinars is the best because you can ask questions and interact. But if you go on our website, our YouTube channel here, you can see all of our past webinars, free webinar, short-term trading strategies, indicators, correlations, investor sentiment, news trading. Somebody mentioned news trading before, news trading webinar. Choosing your stop loss pending orders. There's so many things here, ladies and gentlemen. That's the best thing, I believe. So hopefully that answers your question. Is there a unique account for copy trading If you log in and you go to copy trading, it will provide the information for you there. Or if you want step-by-step assistance while you're doing it for somebody to be doing it for you, just go to the live chat. On the bottom right, there's the live chat. You can ask as many questions there and they can help you quite a lot. So size allocation, what is the size allocation? This is very important as well because you don't want to be overexposed. You want to copy other traders, but on the size of your account and your chosen trade size. Because like we said, there's benefits for individuals that are new traders. Just trade in the bare minimum trade. Just open the bare minimum trade. And something here that I also mentioned is if you're copying a new trader, you've never copied him before, open the bare minimum trade size. Test him. Test him for 1 month, test him for 2 months, for 3 months, for 4 months, however long you want, and then increase the trade size. That's absolutely fine as well. So trade size allocation or volume allocation, it's the same, is basically when you tell the system what trade size you want to be opened on your account, so your preference. Now, how do you work this out? People are going to say this is so difficult. It's not. I'm going to explain how easy it is. So what's the calculation? The calculation is your balance, so the money in your account, the money in the strategy provider's account, times your allocation in decimal points. Now, somebody's probably going to say, I don't know what my balance is, I don't know what the strategy provider's balance is, and I don't know what allocation in decimal points are. Let's go through this in a very, very simple way. So what's your balance? How much have you invested? It's very simple. How much have you invested in this copy trader? For example, if you're investing $50 US, it's $50 US here. The strategy provider's balance. And we'll show you his balance. Just put his balance in your calculations. So for example, it could be $1,000 US, for example. Allocation in decimal points. Now, here you're basically putting the percentage, but in decimal points. So you may say, if you want to copy 100%, then very simply, ladies and gentlemen, you'll put here 1. If you want to copy 200%, you'll put 2. If you want to copy 10%, you'll put 0.01. If you want to copy 50%, you'll put 0.05. Now, I'll give you an example. This is an example here. So let's say your account, you have $100 US, he has $5,000 US, and you put in an allocation of half, or 50%. So that's in decimal points, 0.5. Now, if you do 100 divided by 5,000 times 0.5, it comes up with 0.01. Whereas here, this individual put an allocation of 100%. So he's got in his account 200. The strategy provider has in his account 3,000 times 1, 0.07. Okay, it's very, very simple. Most people only want to, because we've got new traders mainly here, most people, they only want to open the bare minimum trade size. So put a low allocation, the lowest allocation possible, which will open your trade size of 0.01 as you wish. It's vital to open a trade size which is appropriate for your account size. That's very important as well. So if you're gaining experience with this strategy provider and you're confident that he's great and he's profitable and so on and so forth, and you want to increase the trade size, you're more than welcome to do so. But make sure it's still responsible trading and you're still opening the appropriate type based on your account size. So for example, if you've got $25 in your account, because you've withdrawn a bunch, which is absolutely fine, but you want to be opening a trade of half a lot, it's not really responsible trading. It's too much for your account size. But again, that's down to you. It's down to you to determine what is appropriate. Review your trades daily and determine if the stop loss is trading, if the strategy provider is trading as you wish. So as he's trading every single day, analyze alongside him. Review the trades alongside him. If it moves into a profit, you want to close it, close it. If you want to keep it open, keep it open. If he closed it, but you want to keep it open, open a trade. If the market moves against you and he's not closing it, Don't risk it. Close it. You don't have to wait for him. Close it. Maybe he's not going to close it. So close it if that's what you want to do. You are not tied to your strategy provider. If he isn't performing for you, you don't have to continue copying him. Do not use copy trading as a forget and no thought needed road. That's not what copy trading is here. You still analyze, you're still analyzing alongside him, you're still managing your own trades, even though he's doing the trading for you. So that's very important as well. Use a copy trading as a copy trading tool. Let's go through this very quickly as well. Potential gains is copy trading benefit. You're obtaining expertise from more experienced traders a lot of the time. You can diversify, so your own trades and then copy trading. And there's massive learning opportunities there as well. Weaknesses, gains aren't guaranteed. He can make stupid decisions. That's why you need to manage them as well. Because if you're managing it, whether he makes wrong decisions or not, it's absolutely fine. It's not an issue because you're managing it. Success rate of the strategy provider can alter. So maybe 1 month he's earned 100% and you think that's amazing, I'm going to copy him. Next month, maybe he's not earning that much. This is why I also say, look at the track record. Look at the number of trades he has open. If he has a lot of trades open, why are they open? Are they in a loss? Are they in a profit? So these are things you need to look at. Look at the reward to risk ratio, his success rate, and so on. Conflict trades due to unfavorable entry. This is also another factor as well that we of course need to take into consideration. We're going to look at this not on this slide, but the next slide. I asked on the previous slide, what's the best outcome? Okay. Now this depends on you. Some people may say copy trading is the best. Some people may say trading alone and by yourself is the best outcome. It's completely down to you. But there is benefits to looking at a mixture of both. So follow the best strategy provider in accordance to your requirements. Analyze them the way we did a few minutes ago. So you're sure that you're making the right decision. Nobody's pressuring you to follow somebody. You can follow anyone that you want. If you don't like any of them, don't follow them. Absolutely fine. Analyze each trade thoroughly throughout the day. Still analyze the market. Do you agree with your strategy provider's trades? So this is what I'm talking about, best of both. You're managing, you're still analyzing, you're still following, but he's doing the trading for you. So if you don't agree with him, change the trades, close the trades, alter the trades. That's completely down to you. Keep the trade size to the bare minimum until you have established a relationship with the strategy provider. Close trades in accordance to your reward to risk ratio. So for example, if he never puts a stop loss, but you want to trade with a stop loss, put one personally yourself. Or even if it's mentally to yourself, you're saying, I will exit at this level. Continue to learn using our many tools and services. We've looked at this already. Webinars, live analysis, daily analysis briefs, one-on-one sessions. Also, that's a massive factor as well. We've got courses as well, which are coming out very soon. From time to try to make your own decisions and trade in accordance to your own analysis, even if it's on the demo account. So that's also important. Now, this is a scenario which I wanted to show you. And it's a very good example, like I said, why it's good to have best of both. This was a strategy provider which was doing great for 3 months and then had a terrible month. Now here, ladies and gentlemen, he bought. So here on the top right, he bought. He didn't close the trade. Here, as the market moved against him again, he bought again and he didn't open the trade. Then he bought again here, he bought again here, and then he bought again here, and then bought again here. So he keeps trading against the trend, he keeps fighting against the trend. He never closes those trades. They're big minuses, and you'll be very unhappy copying him. So manage your own trades as well. Manage the trades that he's opening. So if he opens here and it's wrong, close it. Close it. Don't keep it open. Close it here at the minus 30, rather than wait until the market goes all the way down to here and it's minus 300. Why do that? So close it yourself. He made the wrong decision. Then he opened again. Here, it's the wrong decision again. Every single buy that he made was the wrong decision. Okay, so number one, he made the mistake here, close it. He made the mistake here, close it. If he makes another mistake, stop copying him. So that's something for you to take into consideration. But even so, you know, if you were closing these trades, ladies and gentlemen, closing all these trades, he's got 6 trades, sorry, 5 trades, sorry, 6 trades where he moved, where they weren't correct. If you closed them, each of them would have had a small loss, okay? Here, he speculated a decline, was a great trade. Here, he speculated a decline as well. These red lines was again a great trade. Those trades were perfect. So it's all about managing. Even though this isn't a great strategy provider and he made wrong decisions, if you're managing it, then even with this individual, you can still at least be at the break-even point if you're managing it. Because this was a great trade. This was a great trade. These poor trades, they were bad, okay, yes, but you closed them for him. Or for example, you know, here, let's say, you know, let's say he bought here, even though the market moved against him eventually, as it moved upwards here, maybe you close it for him, okay? So you close it, even though he wishes to keep it open. So you can see here as well another factor and benefit to also managing and analyzing yourself. Or, you know, maybe this is the NASDAQ, maybe you're looking at the market and thinking to yourself, he's crazy, why is he buying? He keeps buying, I don't agree with this. So as soon as he buys, close it. He buys, close it. If he still keeps buying, close it straight away, saying I'm not willing to do that. I'm not looking to buy. So that's something for you to do as well, a benefit. So this is something else, again, like I said, very important, something for you to look at. You could always see their trading activity. So here, the very bottom, you can see the trading activity. This is a great trader, ladies and gentlemen. I can't remember which trader I chose, but this was a great trader. Look at this, profit, 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 1 loss, profit. So he's got here, ladies and gentlemen, 6 trades, 1 was in a loss. If you look at the minus here, it's not an issue. He's a responsible trader, okay? Let's look at his profitability. This is his profitability, 68%, it's above 65%. Happy days. No open trades, okay? No open trades. Again, benefits there. His average profit, his average loss, he's got a positive reward to risk ratio. So you can see exactly how and what I'm doing. Now, a very simple setup for you to do by yourself if you're trying to analyze a loan yourself alongside him, is the setup here. It's very simple. I could show you something very advanced, but there's no point because you're going to find it difficult. Take a simple step as a first step, and then we can go more advanced. So we've got 3 indicators. We've got the blue here, which is a 75 bar exponential moving average. We've got the green here, which is a 100 period simple moving average. Then we've got the RSI, which is this here, ladies and gentlemen. If the price is below, like you can see most of the time, the price is below, it indicates sellers are controlling the market. And this fits also between these 2 lines, like here, like here, like here as well, also like here. It's also an indication that sellers are controlling the market. So do this alongside your copy trader. If he's, for example, speculating a decline here, great. If he's speculating a decline here, great. If he's speculating a decline here, great. Same thing here, great. If he's down here and he's buying, I need to be cautious because sellers are controlling the market and he's buying. If he's buying, for example, here as well, I need to be cautious. So again, it's a very simple setup just to get you into the game of monitoring what your copy trader and strategy provider is doing. So ladies and gentlemen, that brings us to the end of today's webinar. We've been speaking now for 1 hour. I don't want to keep you here more than 1 hour. I can't see any other questions as well. I can see that we've answered all questions. If people want more information, feel free to get into contact with me. I'll be more than happy to answer as many questions as you like. I will release a poll very quickly, also to give people time if they have questions to ask as many questions as they like. Someone says, is the RSI on a default? No, it's on the period of 18. That's a very good point. The RSI is on a period of 18. And this is only for the 2-hour time frame that's set up. So 75 period exponential moving average, 100 period simple moving average, RSI period of 18, 2-hour time frame. So will the Nasdaq fall below 17,000? Let's see what people answer. Only 20% have answered. Let's at least get 60% of people answering, guys, and then I'll confirm to you what the outcome was, what people believe is going to happen. Only 25% have answered. Let's get at least to 60. And also, if people have questions, feel free to ask. We now have 45% answered. Guys, let's at least get to 50. 50%. 47%. Let's see if we can get one more person to vote. There we go. All right, so I confirmed to everybody what the outcome was. 67% believe the Nasdaq will not fall below 17,000. 33% believe it will fall below 17,000. Let's see by next week what happens. Now, I can't see any questions. Your comments to the account managers. It's not a question. Maybe elaborate, and feel free to ask a question. So I can't see it as a question. What do you mean? Your comments to the account manager. I can see a lot of people saying thank you and then leaving. So I think I will keep it there for today. I can't see any other questions. So let's leave it there, guys. We will have a webinar tomorrow as well, which is based on trends and strategies. So we'll look at that tomorrow. In the meantime, trade safe, trade responsibly, and we'll speak again very, very soon. In the meantime, though, goodbye.